Hi and welcome to this week's SOMAX FinTech Market Insight. As usual, it's broken down into part 1 to 4 now. Hope you enjoy it, and it provides a lot of insight and help for the week to come. As usual, we start with our disclaimer. So trading does involve the potential risk of loss of capital. It's not suitable for everyone. Hopefully it is for you though. And just be aware of leverage. Be careful with it because you can lose substantially more than that initial investment. Everything included in their views, opinions, etc., is just purely for educational purposes. We're just trying to help you guys out and prepare for the week ahead. And of course, we are not trying to encourage you to trade or invest. That must be your decision. But before you make that decision, just consider the risks involved, your financial situation, definitely your level of experience and your risk appetite. And of course, you should only risk capital you're prepared, but more importantly, that you can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you risk that capital. Okay, so part 1, we're looking at the highlights of last week. Yeah, there's plenty, obviously, Easter weekend at the moment, but just looking back, and of course, we're still providing this, even though it is Easter weekend, to help you prepare for next week, whether you start trading Monday or Tuesday. So ISM manufacturing had a big drop, went down to 46.3. Factory orders were also lower. They were minus 0.7%, but the jolts had a big drop down below 10 million, 9.9 million. And that's from roughly 11, so that was a big drop. ADP also dropped to 145,000, and all the PMI stayed above 50. Services was slightly lower, not lower than 50, but came in at 51.2. Jobless claims were higher at 228,000. Just remember, keep an eye on them in the future because I can see them growing on a weekly basis. Now, whether you was active or not on Friday, Good Friday that is, NFP came out 236,000. And the hours worked was down to 34.4%, just slightly lower. Weekly earnings also slightly lower at 4.3%. The unemployment rate, however, did go back to its historical low of 3.5%. The market swung around quite violently, down, up, just very erratic, just simply because there was less traders in the markets. So the volatility increased, thinner volumes and such like. I always warn of this. You can expect a little bit of that probably for Monday and possibly next week as well. When the school kids are off, a lot of traders tend to take a bit of time out of the markets and spend that with the family. Okay, so on to the UK. PMI came in at 47.9. Now the composites pretty good at 52.2 and services at 52.9. So they're pretty much unchanged, but not bad there. For the EU, PMI slightly better than forecast, above 50. And then PPI came in at down 0.5%, so that's promising for the EU. That's month on month. Obviously, it's still 13.2% year on year though. In Germany, factory orders improved and also industrial production was better too. Maybe Germany's seeing a little bit now of that demand from the reopening in China. Canada PMI was a big miss, came in at 48.6. In China, PMI manufacturing was under 50, although services was well up at 57.8%. And CPI came in 0.2% month on month and also 2.9% year on year. So, you know, I mean, most central banks would love to have that sort of data coming through at the moment. Australia rates were unchanged as expected. However, in New Zealand, they did surprise with a 50 basis point hike, which take their rates to 5.25%. That did catch a few people out with a surprise.